Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. I hope you got a sweat on today, great breakfast, spent some time with loved ones. Now let's dive into the analysis. Bitcoin, Ethereum, cryptocurrencies, are they heading to an inevitable new low? That's what we're looking at in today's video. We've got to check out the CPI data, the stuff that everyone thinks the market is being pushed and pulled with, which, like you know, if you've been subscribed to the channel, is nonsense in my opinion, and it has proven time and time again. I don't know why people are still stuck on that, but let's bring up the mood by hitting the subscribe button, like button, bell notification icon, and if you want to wait till the end, I'll remind you again then to hit those buttons. The other quick reminder is we have our masterclass coming out tomorrow, so make sure you are subscribed and join the Investor Accelerator membership if you want to join that masterclass tomorrow. Top of the video description, the link to the newsletter, the free newsletter, will email you out all the details that you'll need to know there to sign up for it. Name, email address, away you go. Last thing, 0% fees on all spot pairs with our channel sponsors, Bybit, celebrating 10 million users. Let's go for those stronger exchanges in these times of uncertainty. All right, guys, so yesterday, sell-off signals. We got this timing pretty well smack on. The analysis has been very, very on point, if I don't mind saying myself. However, let me bring my humbleness back down to a ground level. Things don't always work out 100%, although it has been seeming like that for quite some weeks now. The idea here is that we just need to be able to track the market as best we can, and more often than not, we can see the moves happening in advance of what the news is telling us, which is why I don't pay much attention to what the CPI says, the core, the this, the that, the other. It is really just noise. So this is the way that I have been investing for the last 16 or so years. Real estate, stock markets, I've been trading at CFDs, futures, now a lot in cryptocurrencies. And what I've found is if I can strip back the majority of the noise and focus on the stuff that gets me results, then it's just going to make life so much easier, free up my time and my decision-making process so that I can make money in the markets. Now, the thing that everyone has been focused on lately is, for one, the CPI data that has come out. Inflation came in faster than expected in August. So it came in slightly faster, but I'll show you this on the charts in just a moment why it doesn't even freaking matter. And the price rose to 8.3% from a year earlier compared with 8.5 in July, so it's on the decline, but it was higher than expected. All right, so you can see all the wording here that's used. Annual inflation rate in the US eased for a second straight month. It eased for a second straight month to 8.3 in August of 2022, the lowest in 4 months. Sure, but inflation is out there. Jason's traveling around. He's not seeing the real world. Europe's going to go through some sort of freeze over winter. It is literally just noise. I want to give you that as the hopium, the way that I'm seeing the market at least, and why I'm still investing into Bitcoin, real estate. They're my primary two at this point in time because the cycle is not out yet. And if there's anything that we need to understand about the cycle is when the time is up, the time is up. The time is not up yet. Now is a fantastic opportunity that we've been given leading into that next pump in the market. And that's the macro view. We've got a few more years to go on that yet. All right, so the other big thing that people have been focused on is, of course, the merge. And what we have shown here is that it seems like it has been a sell the news event. It's no surprise to me. I guess it's no surprise to you as well. You've been following this. It's crazy how excited people get with all of these different news headlines that keep pumping up. A day or so to go, the merge is happening. I mean, this can continue to change depending on when the block is that it changes over. But the cycle is down at the moment. Yes, I have said many times that we're looking like we're going through a bottoming process, maybe an accumulation, probably the bottoming process before we start to take off. That's the macro view. So when the time is right, the bull market will start. The time is not right yet, but it's getting very close, okay? That's the time that we want to be investing into the market. Getting hyped up on the FOMO of the merge and this and that, look, it's been shown time and time again, it is basically just noobs getting crushed in the market. Smart money, of course, is playing the game, playing the pumps, playing the dumps. That's what we want to be a part of. We want to be a part of the smart money side, and that's why we follow the charts. So over to the charts, S&P 500 has dumped 4% or so on the CPI data news. We did hit 50%, rejected at 50%. Surprise, surprise. The support level coming in here at 3,880. So this is the S&P. Remember, this is the biggest market in the world, and we want to see what is happening there to give us some clues for our crypto investing. It is coming in at the previous swing bottom here as well. So although the media will probably say it was all due to the bad news of the CPI and other bits and pieces, the trend is still down. We're still within a potential bottoming pattern. However, we've covered several times before that this move up from June to August is an overbalance in price, meaning that the market has pushed up further than any time in the previous bear market. That is a key signal that the trend is potentially flipping from bearish to bullish, but it doesn't mean that it's going to pump to new all-time highs just because of that. It has to come back down, and is extremely healthy for it to come back down and then go through that process again of the buyers playing with the sellers, the bulls and the bears, who is supplying to the market, who is demanding from the market, supply and demand. And we have to keep testing those levels, which is why the market does come back and test the lows to see if we're going to form higher lows and then start to try to move higher again to see where the supply comes into the market. And that's all the market continues to do on the minute chart, the hourly chart, the daily, the weekly, the monthly. It's the same thing over and over and over again. If the news was to report something like that, it'd be so boring. No one is going to watch the news. The news will go out of business because there won't be any advertisers advertising on the news. In particular, say social media. They can't just talk about this is what's actually happening. They need to tell you something else just to keep us all in the rat race of the extreme emotions of CPI was bad, this is going to happen next, etc., etc. So if they actually tell you the truth, no one's going to be interested in watching the news. It has to be based on something, and that's basically just human psychology, unfortunately, because the truth is it is kind of just a boring game. Where is the supply coming in? Where is the demand coming in? Can we tell if there is strength? Can we tell if there is weakness coming in and act accordingly? It's kind of, that's it. So S&P, now that I've gone through a bit of the market psychology, support levels, here we are, 3,880 points. I think that we are almost inevitably going to test some of these lower points here at around 3,007. Like I said, hopefully that was clear enough. Even if we do come down to these levels, overall, my macro support's still sitting at 3,500. This level has been here since the top in December, early January, because that's our 50% level from the COVID crash low to the peak, and 50% is at around that 3,500. So regardless of where we sit, it's still within a potential bottoming pattern. We've got one signal that the market is showing signs of flipping bullish eventually. And the next tick for me would be breaking the bear market downtrend. Provided we get through that, I think we will, then we've got the 50% level currently at 4,200 on the S&P. So this is all looking pretty normal in terms of a bottoming process. What would invalidate that, because we always have to look to the other side, if we broke down from the 3,500 and stayed under there, forming another consolidating period, that could then be a redistribution for further downside. And of course, that's what the flip side is saying in the market, that we could see further downside and the crash is inevitable. There's a recession, a massive recession coming. There's a massive depression coming, etc., etc. But overall, the smart money isn't necessarily saying that right now. They are just pushing the market up and now testing the downside to see whether there is going to be more demand coming in at slightly higher prices. So I've spent a fair bit of time on the S&P. Let's have a look at this in terms of what does this pattern look like? Well, essentially, I see everyone sort of fighting over what is going to happen in this period. I think most people believe the market is going to go up eventually. The two things are the timing. Is this going to happen, this up period going to happen sooner? Like I think probably from 2023 to 2026, or do they think it's going to happen later and the market has to absolutely crumble down? And so we're sort of fighting between this middle ground here. What is it going to look like on a chart? You know, what's going to happen next? Is it going to come much lower and stay down here and hang around and try to accumulate, or are we about to just put in some higher lows and bounce around until we start to head out? I'm of the opinion that even if we get slightly lower prices, it's still within that zone of the bottoming area, and I'm not going to start fighting over trying to pick the exact low, because I don't want to pick the exact top either. All I'm here to do is take a big chunk out of the middle, as big as I possibly can based on my rules and my analysis, and then repeat the process again. It's really, really that simple. So Overall, I think that's what we're essentially fighting about here when it comes to no, it has to go lower, no, it has to go high, no, this thing is going to go much, much further, no, it's not. I think the timing will show that we are in the middle right now in that bottoming process, and we're about to head out to those newer highs. Speaking of which, cryptocurrencies, are they inevitably going to see lower prices as well? Well, here are the levels that we're watching. Around 900 to 920 billion on the total cryptocurrency market cap, which includes everything, BTC, ETH, stablecoins, and all the cryptocurrencies. We were rejected at the 50% level. There was no close above that. That was at basically 1.04 trillion. And then the bigger 50% here is at 971 billion. So the market is closed just underneath that for now. But what I see here is the strength in the total cryptocurrency market cap. You can see the highs slightly higher, and the distance between the low and the current low is a few percent, about 5%. But if we go across to the total 3, which is all the cryptocurrencies excluding BTC and ETH, which is basically all of the altcoins that people try to gamble on, myself included, then we can see that the lows were slightly, the highs were slightly lower here, and the market again is under 50%. We take the next 50%, it didn't even reach the top of those 50%. And bringing that back down, if we look at the distance between the current low and this low, it's only at 3%. So it's much lower to that point, which means that there is more weakness in altcoins than there is in BTC. That's basically just facts on the charts just to show it there. I think we can all agree on that. And to the downside, should we break 360, then I think it's inevitable that we do go and test 340 billion. Not that far from that at this point, but we'll probably know within the next week or couple of weeks. We just need to see where this current week closes. If we can get above 380, then we hold some more ground here with the altcoins and potentially go a little higher again. But if we do stay under 380 at the end of this week, I think we're going to test that 360, which will then possibly collapse, because that's basically a double bottom, which would then be failed. This is the double bottom right here. There's your next low. And if a signal like that fails, it generally means that it is going to go much, much lower. So have to test that, and then it will probably come back down and test 340 and 320 and then break down. My overall position on altcoins, excluding Bitcoin, ETH, and stablecoins, is that we'll probably come somewhere within this zone here, above the previous zone. I was looking here. However, we have to add in that stablecoins are part of this market cap, and provided one of the stablecoins doesn't blow up like USDT or USDC or BUSD, then we probably won't reach this level, because the total stablecoins are worth about 150 billion so far, and 150 billion would sit us right there just in stables. So overall, I think we'll probably come back into this zone. If we do, that sets us up to be about an 80% drop on all the altcoins, and to me, that makes a hell of a lot of sense. I think sitting at around 70% down from the all-time highs is still not enough damage to altcoins. There's not enough blood in the street on altcoins for them to basically accumulate again and take off to new highs. Of course, I could be wrong. This cycle could be a hell of a lot different, but I think overall possibly still see some more blood from some of the bigger ones. Some are looking like they are starting to accumulate. You know, they're down 90 to 95%. So it's a big basket here. I'm talking about 20,000 coins. So there is going to be some variances there. However, should we start to break down, and potentially if we get that first little signal at 360, then I think that gives us the precedence that yes, we'll probably come back to that 340, and then 320 is looking a little bit shaky, and of course 300 is that next low there. There's a lot of really, really close levels, but that's the current market conditions that we are trading in. This is over the macro. I think there's still a fair bit more time to figure out what's going on here. And if I am wrong, if this is invalidated to the downside, then we will hold up 320, 340, and then continue to consolidate and break the bear market downtrend, this blue diagonal, take it off log. It's basically over here as well, still in play. It still has not been broken. And then we can start to see some of that strength come in. So I'm always looking at both sides of it. I'm not willing to rush in and dump a ton of money into cryptos just yet, because I think inevitably we possibly will see some further lows just based on the current information that we have from the chart. Remember, things can change, and we'll be here to note that when they do. The update for Bitcoin in the short term is that we have fallen back under the danger zone here. So we had the 50%, we wanted it to hold 21,900. This is what we talked about in yesterday's video. That was the key level for Bitcoin to hold in order to form a base, move a little higher, and break this micro work-off bullish flip at 23.2. And it unfortunately failed just short of that, which is what we have seen so many times in the past. Look at the other bullish Wyckoff flip bar here, 26,900. The market made it to 25.2 and fell short. What we looked at in April, May of 2021. So this was the top of the Bitcoin bull market. We were looking for 60,500. Bitcoin fell short of that again, based purely on this one bar alone. I reckon this signal is one of my favorites within Wyckoff analysis. And it was unable to hold that, bam, down we go. So although things seem shaky for Bitcoin and the markets reacted quite shaky from the CPI announcements, you can see the lows after the news were still higher than the previous low. So that's telling me something, that maybe things aren't as bad as what the news had made out, and it was just a lot of short-term traders taking full advantage of the volatility for those particular hours in the bar, in the day after that news. And that's all, because basically the price hasn't done much else. It's remained within the zone of the last few weeks. So the level that we're now watching for the hopium here is around 19,500, and then the lows have been put in at 18.5. So the double bottom is still relatively in play. So you got the top to the next bottom. We had a nice bounce out of that, but we have been rejected around that 50% level. It was only that one day above, and then we got slammed back down. So was it invalidated? Sort of, because at the end of the day, it still crashed back under it, and it was only above it for several hours. So the main thing we're looking at here is that the double bottom holds. This is for the bulls. We hold up above 19.5, start to form a little bit of consolidation and try our hand again at 21,900. Otherwise, sure, we're back down to 18.6 and then testing the low again, which still works pretty well into our macro view of the Wyckoff accumulation schematic, where we have to test those selling climaxes and basically form another secondary test. So it's still all within play at this point in time. ETH USD failed at the 50% level. 1730 is now my key level to hold and consolidate above. There are a lot of little 50% levels here because the market's closed and trying to form a new swing. So there's 1670. There is the clear 1700 and 1730. So to wipe out a few of these levels, just to make things easier, 1730 is where I want to see this market get back above and consolidate, so I can test 1800 again and go up. Now I've got 2 days close above, then failure. You can see this day got above the 50%. The next day started to close relatively weak. We had a close underneath it, and then the CPI stuff came out and market got a little bit scared off. Again, lows are still higher than what they were. The weakness, of course, is that the market is under the 50% level. So the bears are in control, but the news wasn't as bad as what I believe the market is making out. Otherwise, wouldn't we have broken down all of those previous lows? It just makes sense to me that if the news was really, really that bad, the market should have taken out all the previous lows. That's on Ethereum, that's on Bitcoin, that's on the S&P. It's just a lot of people not checking prices and what the prices were previously. So weakness is still there. We can test lower prices. Of course, we're still much higher than the current low at $880. Let's continue with ETH USD. It's not looking the worst, but of course, short-term weakness here could roll into some more macro weakness. ETH BTC. This has been the main key play here that we've focused on because it has just been so weak. It has continued to show that weakness days after hitting these tops resistance levels at around 8.6%. We clearly identified this. We're still within that zone, so I'm not going to call it a win just yet. It's still holding up above 7.2%. And when I talk about a win, I'm talking about the analysis to the downside, but it is looking relatively weak because it is still closing under many, many of those previous resistance levels. So it's still in a no man's land. It is trying to get above 8% again, being that significant 50% level. It needs to close and remain above 7.2% and consolidate to test those higher prices again. Hopefully for the bulls, it does this now during this merge period and after the merge as well. That will be a sign of strength for ETH if it can remain within 7.2 to 8.5, consolidate to then make a cause for the next move up. It needs to form something here to make a campaign to say that ETH is strong before, during, and after the merge, so that it can then head to those higher prices and start to take some of that share back from Bitcoin, which will then start to dump the Bitcoin dominance. For now, Bitcoin dominance is still okay. It's still holding up its ground, even though it's pulled back a little, still above its short-term 50%. So ETH looking a little bit weak, but it's still holding up above 7.2%. That's an update for today. Macros still in play. Micros starting to turn a little bit into that downside. Don't forget to subscribe if you haven't already. Like and hit that bell notification icon so that you're here for the updates and not just reading those headlines. Don't forget to join us for the Investor Accelerator membership. The masterclass is going live tomorrow on overbalancing price and time. That's our key, one of our big key signal indicators for trading these markets. So join us there. And of course, Bybit 0% on all spot pairs as well. See you guys at the next video. Until then, peace out.